Joining us outside the White House today is National Economic Council Director Lael Brainard. Director Brainard, great to have you back. Good morning.
Good morning.
We've covered the headline number quite a bit, but I have to imagine you're happy not just with annual wage growth near a three-year low, but participation highest since November.
Yeah, I think this is a really very encouraging report. It suggests that the U.S. economy can continue expanding with the labor market in a really balanced way. We've now surpassed the 15 million new job milestone since President Biden has taken office, and we're doing it with unemployment down below 4% for over 2 years, inflation having come down dramatically over that time. And as you said, the labor supply has expanded, labor force participation is really strong, up relative to pre-pandemic. Those are all really good outcomes for American workers, the American economy.
Director Brainard, Jim Cramer, thank you so much for coming on. You've got tremendous breadth of knowledge, including your Fed work. And I wanted to ask a question just narrative-wise. Are we emphasizing whether the Fed will cut or not way too much versus what is really just a fantastic economy for those of us who've been around since 78, 90, 79, 80. You have what you want. You've got good job growth, not a lot of inflation. Why are we focused on rate cut? Should we just be focused on the fact that this is a good job market with good profits?
Yeah, so as you know, I'm very cautious to respect the Fed's independence. So I don't comment on their policy, but I will agree with you that this is a really nice economy with good, strong job creation in the context of ongoing moderate wage growth and moderating inflation. So that's the kind of economy where I think you can see the sort of soft landing that people did not think was possible just a year ago. And there's every reason to think with productivity as high as it's been, with business investment, with growth, with jobs creation, inflation coming down, that the economy can continue expanding, creating jobs and opportunities in a balanced way.
Do you recall any time when we had healthcare adding good jobs, government, construction adding a lot of jobs, leisure and hospitality adding a lot of jobs, social assistance adding a lot, retail? I mean, this is the most balanced slate of hiring I can recall.
Yeah, this is a very broad-based, ongoing growth story in the U.S. economy. We're continuing, of course, to seeing investing in America in important areas that will build for the future, like green energy, and in areas like high technology, semiconductors. So the broader picture, as you say, I think is very encouraging.
I wonder, Director, how you're thinking about immigration. The Fed chair did mention it. Goldman has a report out today, 2.5 million immigrants last year, close to a two-decade high. Obviously, it is helping the labor force, but how do you perceive it when it's so politically loaded right now?
Well, look, we are seeing just a very attractive job market with loads of good opportunities, and that's why we've seen participation increasing. A lot of that's come from people coming off the sidelines back into the labor market because wages have been stronger. And we've also seen a lot of people moving between sectors for good opportunities. We're doing a lot of investing in good jobs, in apprenticeships, in pathways to the middle class that are inclusive of but don't require a four-year degree. And so there are good opportunities. Of course, immigration's always a part of our labor market's dynamism. Right. We've got pathways to legal immigration that are so important for our labor market.
But will you please disclose how many work permits you've issued? We don't know. The economists don't know. We also don't know what's the real numbers because the Census Bureau has not accounted for immigrants properly. Can you give us a sense on work permits right here, right now?
Yeah, so I can't give you any specific numbers. I'm looking at the jobs market from this morning. You're looking at the same numbers. What we see is that The employment to population ratio is very strong, close to record highs. Labor force participation, the number of Americans that are participating in this really good labor market under President Biden, very high. And that allows the economy to keep growing, businesses to keep expanding, consumers to remain resilient because those paychecks are better than they've seen. So all of those things bode well for the continued expansion in this economy.
Finally, Director, I'm sure you know that oil has gotten the market's attention. Year-on-year gasoline retail prices no longer negative going back 12 months. To what degree are options like jawboning or the strategic reserve entering the conversation again?
Yeah, so gas prices at the pump are so important for American families, and a big focus of President Biden. We are pleased that gas prices have come down by $1.40 relative to that peak that was caused by Russia's invasion of Ukraine. But as you say, we are watching carefully to make sure that those gas prices at the pump don't go up, don't squeeze Americans. And we're going to continue monitoring and making sure that we see the continued strong production here and around the world that's going to be necessary for that important price at the pump in the months to come.